we need more competition. And so I'm very excited about it. It's going to force some of the older CRMs to either leave or give up or upgrade, right? And some of the newer CRMs to start fighting on features and maybe more value, right? And so there should be a feature trickle down. Like Canadian CRMs are going to feel pressure to improve their UI, their integrations, their AI features to keep up with each other. So there's going to be a bit of an arms race. There might even be pricing competition. Typically in software, it's not a battle to the bottom, but it may be certain things where more features are added in, more bundling, things like that, i.e. more value for you, the advisor, which is huge. And there might be some partnership shakeups, like the MGA layer is really important in Canada, the dealer layer. That layer drives a lot of growth and a lot of new business. And so there might be some shakeups there. Hello. Welcome back. It's good to chat with everyone. Another episode of Advisor Tech Trends. My name is Massimo, the host, and today is kind of a news podcast that recently hit Canadian shores per se. So today what I want to talk about is Wealthbox, a CRM in the space. I'm obviously partial to CRM. I'm part of a CRM company or a Canadian CRM company. So I want to talk a little bit about what this means. It's kind of exciting in some ways, definitely exciting for all of the advisors. Talk about this tool, talk about why it's important, what it means for the market, and all of that. So as always, please like, comment, and subscribe, and I'll see you in the video. All right. So Wealthbox, what is that, right? So Wealthbox is a name it's a CRM software based out of the States. It's kind of been a software that's become synonymous with like sleek, user-friendly CRM for RIAs or financial advisors, right? So they just recently, literally last week, received a $200 million majority investment from a company called Sixth Street Growth. So this isn't like a small Series A. This is growth capital at scale. And so that basically signals we have product market fit, we're ready to groove. Let's grow internationally. They sold over half the company to this firm to inject capital to really accelerate things. So what does that mean in the Canadian context, right? It's an American company. How does it stack up with the other CRMs that kind of dominate here? Yeah, we're going to unpack that today. It's honestly very exciting. So let's do kind of a quick recap on what's happening here. So Sixth Street has taken a majority share of Wealthbox. Wealthbox has historically been like the strongest US-based independent advisor, small RIA, like small user size. It's really known for its ease of use, clean onboarding. It's a very simple system. I've played around with it. Very easy to use. Doesn't go too deep into the future features. It just kind of has pipeline management and simple stuff like that. And so what does this investment kind of signal to the market? So number one, they want to do an upmarket push. So they are taking a lot of this investment to start pushing upstream into dealers, carriers, things like that, not only in the RIA or small financial advisor world. The second piece is feature acceleration, right? So they want to start adding new features into the tool, and $200 million is going to allow them to hire a bunch of staff in order to do this, which is definitely really exciting. One of the things they're talking a lot about is AI-driven initiatives, which makes sense. There's not a lot of AI in the tool right now, so they do need to level that up. And then the third piece is geographic expansion, and that's probably where Canada comes in the most. So while we haven't seen Wealthbox up here that much, this type of funding, and in their press releases, signals international expansion. So we'll talk about that a bit, but they really want to get outside of the US. And I mean, the US market is large, but I think they now have such a product market fit that they feel like they can go compete in other markets. And I have some opinions on that. We'll kind of go through it as we go. So what does Canada look like today? Some of you may not even know the CRM landscape that well here. So let's zoom out for a second. So unlike in the US, where Wealthbox competes with like Redtail, Salesforce, Financial Service Cloud, and other niche platforms, the Canadian market is heavily distributed by MGAs and regulatory requirements. So there's less of those guys up here. It's not really worth the squeeze for companies like Redtail and things like that to come up here deliberately. If they get Canadian clients, they're fine with it, but they're not deliberately coming up here. So what are the tools out there right now? So there's Uphabit or Practifi. That's a very large enterprise tool. They play more in the MGA carrier world. Then there's Cloven. That's the one I'm partial to. Cloven, it's a purpose-built financial advisor CRM built on top of the Zoho product suite. So it gives you a lot of flexibility, a number of integrations, a big product suite. Then there's Salesforce Financial Service Cloud. And that, like, to give you kind of a scale, like Cloven is like 100 to 120 bucks a month. Same with Wealthbox. Financial Service Cloud is like 250 to 300 per month, very easily. And so what that means is they're kind of fighting in different markets, right? Then there's like custom implementations. So you can go buy HubSpot or Pipedrive or Monday or something and customize it to your own liking. That is one-time expensive. Like it could be 10, 50, $100,000 to get it set up to your liking once. And so not many people go down that road. People want to typically get out-of-box solutions or something that's mostly out-of-box. And then there's Wealthbox. So to kind of sum that up, there's Practifi up here at the big MGA level. There's Cloven, Wealthbox kind of fighting in the small RIA level. And Wealthbox hasn't really been a player. And then there's custom implementations of HubSpot or whatever, and Salesforce Financial Cloud. So there's not many vectors. And so it makes sense for Wealthbox to try to come and compete up here. Funny enough, I don't know, maybe 2 months before this announcement came out, Wealthbox did announce that they're getting Canadian data centers, which has always been a barrier. Up in Canada, you actually have to have your data stored at least, the MGAs and the dealers want your data stored in Canada. And so it's often a barrier to people adopting Wealthbox or other tools that are where the data is in the States. So Wealthbox realizes that they also need to get their data in Canada to start fighting at more of an enterprise level, right? Those enterprises like won't even take the call if it's not. And so there's many reasons for that. A big one is the Patriot Act, where technically the US can ask for any of the data anytime and we have to comply. So if you have the data here, it's a little more protected. So without going there, there's 4 or 5 players up here. And most of the players are kind of fighting in the small medium space, which is where Equisoft is coming. And so, like, why are they different? What's different about them? If Wealthbox brings its US paycheck or playbook to Canada, it's not really a guaranteed slam dunk, to be honest. That's my opinion. So they do bring some advantages. Speed to value. They're very quick on getting you value in their CRM. Like with logging in, you can get your email integrated and stuff within minutes, which is really good. Obviously, getting $200 million as an investment signals that you know what you're doing. And they've got some US integration partners, right? And so not all tools in Canada are used in the US, but that really helps their case and it helps accelerate their learning. Now, here's kind of the challenges and why they can't just carbon copy their playbook up here. Number one, compliance. It's complex in Canada, the compliance landscape, and pretty rigid compared to the States. For better or for worse, that would be a whole other podcast, but the fact remains that it's more complex here. And so what does that mean? You got to deal with Quebec. You got to deal with the rest of Canada. You got to deal with data residency, all kinds of compliance in the tools, almost like GDPR, but not really. So that's a long-winded way of saying it's much more compliance heavy up here. So Wealthbox is going to have to make those judgment calls on how many users they can get up here for the compliance complexities they got to build in. Is there ROI? They've obviously done some math and said, yes, Canada is not the only place they're expanding to, but that is one thing. The other piece is there's pretty large integration gaps for them. You got to start integrating with all the carriers, all the MGAs, all of that. And that's honestly a multi-year process typically, and a lot of shaking hands and stuff, right? So that's a gap they need to fill, and it takes a while. And then the last piece I'll mention is just in general, Canadians are more price sensitive, especially in the small advisor world. We're always more reluctant to pay, want longer free trials, etc. And so Wealthbox just has to know that coming in. They have to be prepared for that. And maybe they need to combat that. I don't think they're going to lower their prices. They might play with some currency exchange stuff, but that's something to keep in mind. So like they can't just come up here and use the same playbook. They're going to have to figure out a compliance lever angle. They're also going to have to figure out a pricing angle, and the integrations is going to be a multi-year project for them. So, I mean, to kind of zoom out, is this good or bad? right? I mean, from an advisor perspective, this is always good. I'm a firm believer in more competition. And unfortunately, here in Canada, we typically don't have a lot of it. We deal a lot in oligopolies, like one or two or maybe three big players that dominate the market, price controls, la, la, la. We need more competition. And so I'm very excited about it. It's going to force some of the older CRMs to either leave or give up or upgrade, right? And some of the newer CRMs to start fighting on features and maybe more value, right? And so there should be a feature trickle down. Like Canadian CRMs are going to feel pressure to improve their UI, their integrations, their AI features to keep up with each other. So there's going to be a bit of an arms race. There might even be pricing competition. Typically in software, it's not a battle to the bottom, but it may be certain things where more features are added in, more bundling, things like that, i.e. more value for you, the advisor, which is huge. And there might be some partnership shakeups, like the MGA layer is really important in Canada, the dealer layer. That layer drives a lot of growth and a lot of new business. And so there might be some shakeups there. There might be some exclusivity, which has never happened before. In general, these are all good things. All of the Canadian CRM companies, including ours, are starting to think, okay, how do we do this? How do we get better there? The reality is, Wealthbox being an American company, even though their data is hosted in Canada, there is a bit of an ideology going on right now in Canada where you want to buy Canadian made and all of that. So they're going to have to combat that. And I don't really know how they're going to do that. They're probably going to make a local office with local talent, et cetera. But I mean, the reality is a lot of these tools, Salesforce, Redtail, a lot of these are either owned or operated by Americans. And so that will be something they'll have to overcome, but it is very overcomable. I think at the end of the day, we're all just going to have to push the value curve, which is super exciting, and advisors need it, honestly. So if you're a Canadian advisor, like choosing a CRM or look at the vendor roadmap, the commitment to the Canadian market. Like, for example, us with Cloven, we only operate in Canada. That's our only plan, is to continue to do so. And so a new entrant with US features might still not have the integrations, might still not get our market, et cetera. But the reality is our team is having to figure out how to compete better. And we haven't been excited about that in a little while. So that's really good. So, I mean, in short, be excited about it. I'm excited about it. They are a good software. And let's hit the road. Let's start battling. If you enjoyed today's discussion, subscribe to Advisor Tech Trends. I love hearing from you guys. And